Hey traders, Nick Shaheen here recapping another ugly day in the market, and today might be the ugliest given what happened, not how it happened, it's just what happened. Actually, maybe how it happened, it was so disappointing. Regardless, scoreboard first. Scoreboard says minus 1% across the board, except for tiny, tiny diversion in the Nasdaq. Sarcastically, he said minus 2.5% on the NDX. That is a giant move, almost 100 points. On the backs of what? On the backs of froth, meaning perceived froth, I should say, and that would be the likes of Priceline. Unfortunately, Google got bumped into those, which is not froth. Twitter, Tesla, Tesla's down almost 8%, Twitter down almost 9%, LinkedIn down 4, Baidu down 4.5, CRM down 4%. FFIV, that's F5 Networks, down 7. And it seems like they blame it all on one stock, MCHP or MHCP, I can't remember them. But anyway, micro that attacked the technology sector. And so what happened? They sold off Intel down 5%. So not only froth like Zillow and Yelp 5%, 5%, 6% down, Alibaba down 3, Yahoo 3. So you get the idea, but also some good names like Intel. However, Intel did have a pretty giant ramp, and so I did expect that somewhat. But you get the idea. Red day, super red in the technology sector. That is a hideous move. I think first time in 3 years that we've had the two giant moves like that in the Nasdaq this big. I think the Dow is red for the year, so a lot of damage has been done today. And why is it the way it happened also damaging to the psyche? So that's technical damage. Now we've got sentimental damage. Or psychological damage is because yes, we sold off at the open, but then we had a hopeful rally. This is the S&P right here in the ES. We had a hopeful rally from which where it was on the back of Apple. This is Apple right here, sold off, but like a champ, was fighting resistance. I knew it didn't have a chance to get up there, but right around here, also Gilead had a chance of breaking out because there's some news about some FDA, and it's also a big sized box in the Nasdaq index. So both together tried to break us out but failed right here. Had they gotten another 50 cents here, at least for Apple, they could have ran it up another extra 50 cents. So, but it's all in resistance territory. The open interest told us that this was resistance starting at 101. So all of this move from here was defying gravity. And then guess what? It reverted way back down to close just under 101, which is the sweet spot based on the open interest. So it was the champ for the day. It was the champ for the week. Without it, we would have had a much worse week than that. Google got treated like a momentum stocks, which I don't like. So this was what happened and how it happened. It was a heartbreaker because we thought we had rallied back, nice rounding, and then we just ski sloped down to the close. It's like everybody wanted self-fulfilling prophecy. This is about where the 1905 level that everybody wanted to see it kick. And well, guess what? The SPX closed at 1906, so let's call it 1905. With the few minutes that it should trade past that. So we're there, right? So now what? We're there. Oh, before we go to well, we're there. There's a ski slope called the Nasdaq. This is just relentless selling. That's the day for the Nasdaq. Down, barely recovered, all in the backs of Apple, and then straight down. That's terrible. Very bad sentiment. And then we'll review the bigger picture by zooming out even more than just one day. But so now what? Well, this was a terrible day where all the support ranges have been breached and or kissed, and now we are at the mercy of momentum because that's the now what. We are at the mercy of momentum, and unfortunately, momentum is fueled by headlines. And they have been relentless. They're coming one after another, and just when you think you're getting a breather, you get another one, and finally, late in the day, we get the S&P. That's what caused the last debacle. The S&P rating agency comes out and says we're going to review the outlook for France and downgrade it. They didn't downgrade the credit, but they downgraded the economic outlook for France. Duh. I can't believe the effect they have on the I remember the last time they damaged the US. But anyway, so there we are. One headline after another, and the headlines fuel the momentum, and the momentum is downwards, so we're at the mercy of that. We're going to need something to break that momentum. We have nothing offsetting the headlines, and on top of it, we have whispers like, "Oh, microchip is pre-announcing, hinting towards terrible, or the peak of the market, or whatever they said." So we need something like, which puts me to what am I watching next? Intel. Why? Because Intel could represent the Nasdaq. Why? Because it is not froth. It's the leader. It's the top. It's the top player. And if it can come out on Tuesday next week when it reports earning and say the opposite of what Microchip said, then they'll say, "Oh, wait a minute, these other guys were just crazy, or it's a one-off, or it's their fault, operational something," and it could just offset something. So I'm watching Intel. If the market steps in to buy Intel, then they are likely to buy the Nasdaq, meaning that it will be a good gauge. I'm not going to trade Intel. I'm just using it as a gauge for sentiment to see if truly we're going to use this 1905 stopover in the SPX as an opportunity to review the whole thing. I still hear people saying, "Oh, we're only 3 or 4% or 5% off the high." Yes, but we're like almost 14, 15% off the high on the small caps. Doesn't that count for something? And then deflating 2.5% in the Nasdaq in some decent stocks is just also crazy. Not crazy. Also counts for something. So not every sell-off is the same, and not every percentage is the same. So next week is going to be really a good gut check for the global thesis. We're going to have to first of all, prioritize and play defense. That's how I would trade it. I would play defense, not offense anymore, and pick small offensive plays. Like I look at the scoreboard last week. I looked at the scoreboard, and actually not like this week when we had a giant green day. I said I'm seeing some limping people. So the ones that are red on a giant green day, the first one that came to mind was Tesla. I said let's go short Tesla. So that's how you pick some potential losers, because if the markets fall and it was red on a green day, then Tesla is going to fall harder, and it did. And it was down 6% when everything else wasn't yet down 6%. And so the opposite today, on a giant red day, you see where's the relative strength. Apple had it. They have an event next week. They usually sell the event, but they buy it into the event. So Apple, maybe some calls in Apple as a lotto. Nothing giant. It's not a giant investment, just to participate. CMG, believe it or not, Chipotle was also decent. Starbucks was green up until the end of the day, and there are like PXD also, maybe, I don't know, it depends on how the candle ended up. And eBay is close to the level where it's still higher than the level where Apple came out with Apple Pay, and that was like the, oh my god, this disaster for eBay. I think it got down to the 50 level, and now it's still above that. So if it held above that level, then it might still make a decent long. So these are things I would pick on the long side. However, the priority is defense if you are long. If you're short, then time to book some profits and start to think about trying to pick some longs. But there's no rush. You got to see how Monday happens. Speaking of Monday, Monday is going to be light volume, and there are no treasury. It's kind of like a quasi-US holiday. However, we're going to probably come into the day with negative bias. And that's not talking about headlines. If headlines mess with us, then we're going to have a definite negative open. And also the European markets or overnight, European and Asian markets are not going to likely like what they saw here today, here being the US. So Monday is going to be important. On a light day, it's going to be easier to move markets, which makes it even more so dangerous. We'll see how we trade without the treasuries. Nick Shaheen here, signing off.